HSBC Securities and Capital Markets to discuss the policy in greater detail as well as the state of the economy. Pranjul, good to have you on board. Given the fact that during the last policy, inflation was above the RBI's tolerance band, and my colleague Harsh just flagged off how now over the last 2 months there has been a cooling down in inflation, would that indicate that now there's greater flexibility for the Reserve Bank?
Yeah, thank you for having me. So look, definitely, data is a little more softer compared to a few months ago, and it's not just in India, but it's globally so. But having said that, I think we have to remain watchful. We can't declare victory yet for two reasons. One is that most of the disinflation we are seeing right now and we expect going forward is going to be on the back of a good food crop. Now, we know that every few months we are seeing a sort of adverse climate event. Last year's March heat wave completely destroyed 1 year's wheat crop. So we have to really see this entire sort of harvest season pan out properly before we declare victory on that front. And the other one is core inflation. Core inflation remains extremely elevated and sticky at above 6%, 6.5%. And the problem with that is that, I don't really see reasons why it should fall very dramatically. There have been structural changes in the economy. Large firms have gotten larger. They have more pricing power. We have more import tariffs, which have raised the cost structure of the economy. So I think those parts of inflation are likely to remain elevated. Yes, falling growth will take some pressure off, but we're not really expecting growth to fall in a substantial manner in the next 12 months. So how much it takes off from core inflation could also be limited. So with all of that in mind, I don't think the RBI can really claim victory and stop hiking rates. I think one more rate hike has to happen, which we think we'll see tomorrow.
So Pranjul, can't call it a victory yet, but when do you expect the RBI to finally hit the pause button? And also, are you expecting a change in the stance as well? And what more are you looking when it comes to the commentary from the governor tomorrow?
Yeah, so look, I hear your point that things have softened around the world. And my sense is that tomorrow's rate hike will be the last rate hike for now. Obviously, sort of risks remain. We don't know where the world is headed in the next couple of quarters. But for now, I think tomorrow's rate hike of 25 basis points will be the sort of last rate hike out there. In terms of stance, my sense is it'll stick to the old stance of withdrawal of accommodation. And there are two reasons for it. One is that liquidity is still a big high in the system. And one of the reasons they had called it withdrawal of accommodation was because liquidity was very high. It continues to remain so. So I'm not sure tomorrow is the time to get down to neutral. And the second reason is the rupee. What we've seen in the last couple of weeks is that the rupee has underperformed the rest of the region. We've been seeing big, capital outflows from the portfolio equity markets. And my sense is that at a time when there is slight vulnerability on the rupee, the RBI will not want to make too many changes. And from that perspective, I think they'll sort of try to not change the stance in tomorrow's meeting. Maybe the change in stance will happen in the meeting after.
So Pranjul, what about the outlook when it comes to the challenge on growth, and how much of an impact would you think these rate hikes would actually have when it comes to the growth rate trajectory?
So look, we have growth softening in FY24 from 6.8% to 5.5%, led by three reasons. One is export volumes have been weakening. The second is the pent-up demand domestically is now fading because household financial savings have dipped below pre-pandemic levels. And third is a tighter monetary and fiscal policy. So all of these come together to slow growth, but it's a good slowdown. It's a slowdown that will create sustainability over time. It will bring down inflation. It will narrow the trade deficit. So I think it's a good quality slowdown. And we don't expect a dramatic fall. In fact, I would go ahead and say that there are some pockets in the economy which are looking stronger than before. Rural demand, the informal sector, I think both of these have really ticked back up. And I think while FY24 growth will be a bit softer than FY23, it will be more equitably spread across rural India and the informal sector, something which we didn't have in the last couple of years. So I am not that worried, on the growth front.
Pranjul, I wanted to shift focus a tad bit and talk about currency as well. Rupee has weakened considerably in the last 2 to 3 sessions. And even if you hear the commentary that the CA said when it comes to the economic survey, there was a risk that was flagged off regarding rupee being monitorable when it comes to the current account deficit as well. What's your own take? Have we seen the worst of the rupee depreciation, or are there levels of 84, 85 probably probable this year itself?
Look, last year the main concern was a very wide current account deficit, a very wide trade deficit, and I think there is much to sort of feel good about this year, because I think the trade deficit is going to narrow. I think the current account deficit is going to come back down to sustainable levels, and the reason for that has been good policy steps. The fact that we've raised interest rates so much, the fact that we've engineered a real trade-weighted rupee depreciation, which on the margin incentivizes exports and reduces imports, and also the fact that we have a good macro house, as in fiscal deficit is coming down. It sort of shows that this economy is getting more stable over time. I think all of this will bring down the current account deficit, and that is not my primary worry. Instead, I think the worry in the next 12 months will be more on the capital account side. The fact that will India be able to attract a lot of capital inflows to fund its current account deficit? I think that's going to be the key concern over the next couple of months. I think what we've seen right now is there has been some redirection of capital, but hopefully over time, if the risk appetite globally improves, then my sense is that maybe we can start seeing some inflows back into India, especially in the equity markets. But until that happens, I think we need to be watchful on the volatility on the rupee.
Yeah, and what about your outlook when it comes to, the soft landing? Because we have seen crude oil prices come off, the dollar as well has declined. Globally, how quickly do you think that we can see rates coming off, rates coming back off, and how easy is it going to be to have that soft landing?
Well, we globally, we do think that, inflation may have peaked in many parts, but we don't have it coming down in a dramatic fashion. In fact, we still have, Fed likely to hike more, and we don't have any Fed rate cuts for the rest of the year. In fact, even for India, while I think tomorrow we are going to see the last rate hike, I have not penciled in any rate cuts over FY24, simply because even though inflation has peaked, I'm not seeing it coming down, and the 4% target is nowhere in sight. So I think that's sort of going to remain the theme of higher for longer. That financial conditions could remain tight for an extended period.
In our interview yesterday with the finance minister, she talked about the fact that the capex demand from states has also been quite resilient. Do you see that as a trend as well, that the states will continue to invest more when it comes to the capital expenditure this year?
Well, look, as an FY23 is just ending, we just have one more month left. Perhaps state capex will pick up in FY24, and maybe that is what she was alluding to. I didn't watch that interview. But my sense is in FY23, or for that matter in FY22 as well, state capex hasn't been strong. It has been quite weak. In fact, I would say states have just basically not been spending. States can easily run a fiscal deficit of 3% of GDP, but for FY23, they are tracking even lower. They are tracking 2.3% of GDP fiscal deficit, which means that they have not been spending very much. And when we look into the details, it is capex where they are spending the least. So I would say, that this year states capex hasn't been supportive of the overall capex story. But yes, the hope is that next year they do more capex, and one of the drivers can be the interest-free loans that the center is going to give to the states. And this time the states can use it for a variety of things, a bigger variety of things than in the previous year. So maybe that's an incentive, but at least so far the data hasn't looked very good to me.
All right, Pranjul, appreciate your time. Thanks very much for giving us your assessment of the RBI policy, your expectations, as well as the overall growth and economy. Let's move right on then and find